we must keep in mind. And I keep repeating, it's not like the challenge is not real. But the first and foremost, while all those developments are happening, you are probably aware there is an entire evolution happening through NPCI on UPI. That may even, I would then question the existence of wallets and the Paytms of the world.
Okay.
Because I can then do with mobile instant to any bank. Why do I have to move money to a wallet and from a wallet to something else? So just as the development is happening on the emergence of a new banking category, the payment space itself is materially changing.
Yeah.
And banks are at the forefront of it. So I don't think we can ignore that reality.
Okay.
The second, the same ideas and Vodafones and Airtels, often nowadays, unfortunately, when we call somebody on the mobile, we ask saying, do you have a landline to call? And it's a reality. If I call you in Mumbai on your mobile, then in the instance, can I talk to you on a landline? So there is a genuine problem. The same brands are not evoking the same response as it did a few years ago. So we can't believe that it's going to be an automatic choice. Third, we may grossly underestimate the power of a regional brand. The names that you mentioned, for somebody sitting in Mumbai, seeing world differently, could mean very differently for somebody sitting in that local geography where their allegiance is significantly higher to that brand. So I think for these three reasons, there is a good case for these banks to upgrade the capability. So I won't believe that they will not come and walk away with the business. Yes, there will be, like Mr. Purwar pointed out, there will be stiff competition, the survival of the fittest, all that will come. But it's not like a winner takes all and there's only one winner. Is the only point I would add to what you're asking.
Mr. Sharma, should you not be worried more about the small bank competition? 3 small banks have got licenses in the Bangalore region. There is Jana Lakshmi or Janagraha, which is operating a fairly good business in Bangalore. Then you have got Equitas, and Equitas is already giving, I understand, about 2,000 crore loans to CVs, commercial vehicle segments. Not a small competitor. And then you have Ujjivan as well. So would you not worry that they will take away your high margin SME borrowers?
I'm not doubting them on that, but their cost structure, presently, as you said, 8 of the 10 people who have been licensed are basically MFI players who are used to working on a margin. They borrow from banks at, say, 11%, 12% and do the lending at 25%, 27%. So the kind of margins which they are working at and they are successful at, there will be a little bit of a challenge in replicating that when they need to work on a margin of, say, 2% or 3%. And similarly, the cost structure. If you look at the cost structure of Bandhan before it was established into a bank, and the cost structure which they will have in the next 3 years when the Bandhan Bank is alive and fully kicking, so that is in itself a challenge.
All right, only time.